Hi Crypto Kings and Queens. Hi Crypto Kings and Queens. Hi Crypto Kings and Queens. Welcome to today's Hello, Miss Natalie. Hi Crypto Kings and Queens. Hello guys. Welcome to the day. And what we're gonna go through today is a fake out strategy, so we're able to trade the market, right? That's amazing. What we're gonna go through is obviously how you can go long and short in the market without never ever being drawdown. I'm just joking. That's part of life, right? And also part of trading. Before we're going into this strategy, we obviously want to have a platform to trade the market on. And at this time, if you are scrolling down to the link in the description down below my video, you can right now have a free $10 when you are depositing $100 to trade. This is some Bitflex and you don't need a KFC. So what you're doing is that you're obviously just pressing the link and it takes you around 20 seconds to register on this platform. Now the good thing with this is that you can get your extra $10, which is really good because you don't have to have billions of dollars for you to be able to trade the market. And it's better actually to have a smaller account in the beginning, and slowly and steady you are trading yourself up to a bigger account. So this is perfect for you to be able to trade the strategy, and you have the extra $10 for you to be able to gain more money, right? Tell me how it goes after this. Okay guys, are you ready? Let's go. So when we want to go short or sell the market, we want to do that against a resistance. When we want to go long or buy the market, we're doing that against a support. This is basically how it's going to look. This is how it looks on textbook. It's going to look a little bit differently on the live charts, but I will show you how it looks over there. Basically the rules is that we need to have a resistance where we see the market creating one touch first. We would need to see the break of this level, which will be this one. But the most important thing now is the third reaction. So we want to see the market close below the first resistance, retest it, close below, and then we're selling the market and we're using previous support and resistance zones as our targets and the stop loss above the fake out. When it comes to the long, we want the market to create the first support level. We want the market to break the level, and after that we want to see if the market's going to come back down, retest the first support for then have the continuation up. We're using the take profit from the previous high, and we have the stop loss below the previous fake out that we did have. So let's get into the chart and see how it looks. So what I want to do is that I want to show you on the daily, 4 hourly, 1 hourly, and 30 minutes. Of course, you have to be able to understand, are we in a uptrend, are we in a downtrend, and all of the different things around the strategy, but mainly focused on the support and resistance zones. And the first thing that I want to show you, this is on Ethereum. We're using the support at this time. So you can see that overall the market is right here going in a sideways market. A very important thing here, you can see how the market is bouncing in between these levels. Overall, you can see how the market is going to the upside. So what I do is that I never use the fake out level because that is the one that's gonna guide me to what I'm gonna do next. So what I do is that I'm using the support before the fake out, which means that I need to change the box a little bit. And you can see how the market tried to break this level, but we saw then how the market did close above it. So you can also see how the market right here came back up, retested the resistance, we dropped down, and this is what we are waiting for the market to do. So now we are obviously looking at the daily chart here, and when you're looking at the daily, you need to go down to potentially the 4 hourly, the 1 hourly to find a good position. But the most important thing here is that you have the guidance, that you have the support, you had the fake up from the support, and the market is then testing this level. Okay, let us go to the 4 hourly chart so we can just perfect the strategy a little bit. Let us do this. We can see how the market, we're just going to take the box here based off certain candlesticks that we're using, and you can see how perfect the market came back down, retested this level. This is a way for us to be able to go long in the market. As I said, you just might need to have more confirmations for you to be able to go long, but this is such a good strategy because you're using the previous support, you have the fake out, and when you see the rejection that we have around this level is because we are testing the first support. When we want to enter, I would obviously don't want to have my stop loss below the previous low, but this is the confirmation that we're going up. So we can go down to the 30 minutes charts and do the exact same thing. So you can see how it did touch this previous support, but we also have a support now on the 30 minutes. So what we're going to do is that we're going to highlight this level And you see how many times the market tried to fake us out. And then when you see finally how the market is closing inside, you have the retest, then you have the big momentum. We don't know for sure if this is gonna be where the market is just bouncing from nowhere. We don't know that this is gonna happen because you've seen so many times how the market tried to break the level and we only came back up to the previous resistance. And this is the reason why I'm telling you that when you are entering, in this case a long, you are entering from the previous support, you have your stop loss below the lows, and then you also have your take profit combined with the previous high. So now we're looking at a resistance. We're still looking at the daily chart. So we're gonna highlight one resistance right here. And then what we wanna do is that we wanna go down to the lower time frames for hourly, and we're just gonna adjust the box a little bit because we have to adjust it to the level that we're looking at, or at least that's how I do it. Because if we're having a box from the daily or weekly, it's not gonna make sense on the 4 hourly. It's just showing you that's certain levels that's very important. And the same thing here, you see resistance. So when the market comes back up here, this is where we're gonna focus on. Okay, so we have one resistance, we have the candlestick, we have the fake out. What happened? Market broke down, you have the retest from below, market then continues down, and what do we have? We have the take profit down at the previous support. So we're taking the entry points where we see the retest, you have your stop loss above the high, and then we have the take profit down at the support. So you can either choose this support that we have from the 5th of June, or you can choose this one that we had back from June 2001. The most important thing is that we want to use the previous resistance fake out, and that's the resistance that we're going to retest. We have the stop loss above the high, and we have our take profit at the support. We have another example here on the 1 hourly chart. So we want to highlight the resistance. We can see overall the story before was that the market was going down. We have one resistance level where you've seen how the market has retested 3 times. So this is giving us the resistance. Market gave us a fake out. Market drops. You have the retest against the first resistance. Market then drops. So what do we want to have? We want to have a short position. We want to sell the market where we had the first resistance. We have our stop loss above the fake out. We have our take profit down at the support. And this is some really good risk to rewards too. So sometimes we don't have a retest, but what we can do, we can use buy limit orders or buy stop orders. In this case, you can see how the market is in a uptrend. You can see clear higher highs and higher lows. We're creating one support because we still know that the market is in a uptrend, which means that when we have a fake out, the market usually have the tendency to continue to the right direction. But as I said, sometimes we don't have a retest, and we don't know if that's gonna happen or not. In this case, this did not happen. In this case, we can use the Fibonacci, so we drag the fib from the last low to the high, and you can see how perfectly the market came down, retested this level, and had the momentum to the upside. So this is where you're gonna choose if you want to wait for the market to give you the retest, because these 2 candlestick is representing the fake out. You had the breakout candle, you have the candlestick that's closing inside the previous support, and that is the confirmation that the market is going to the opposite direction than what the market told you it was supposed to do before it faked you out. That's why we call it a fake out, because it pretends that it's breaking the level, but it's not doing that. So when everyone have their breakout strategy, it's usually a fake out strategy. So rather trade with the fake out. We have the exact same thing here. We have another support level that got faked out, and we saw how the market did continue to the upside. So many times you've seen how the market, you have the first resistance right here, support, sorry. You have the fake out, market drops down, retest it, have a momentum up. We're also testing the resistance right here. Market drops down to the exact same level, fake out, you see the retest, the continuation up. So you had actually 2 times where you could have gone in for a long position. And this is also a really good reason for us to use the support and resistance zones as targets, because some, you know, when the market, we don't know for sure every time the market is going to have this crazy momentums. And you know, when the market is going in a sideways market, it's just bouncing in between support and resistance zone. So for this strategy, I would definitely recommend you to use the previous support and resistance zones, and then also use the fake out levels as the stop loss where you have it below. Because as you can see, each and every time I've showed you this, and I can guarantee when you go back testing this, you'll see how good it is for you to have the stop loss below the fake out, because the market usually don't come back down after the fake out. That's when the market is going to the direction it was supposed to go in the beginning. And with just a little bit patience, you're waiting for the market to have the break, and then you have the retest of the support or resistance before the fake out. That is the most important one. Thank you so much, guys, for looking at this video together with me. If you haven't already subscribed to my channel, make sure to do that so you know when I am updating you with videos like this, have my live streams, etc. And I'm a pretty funny girl, so I mean, you would just miss out if you're not listening to me, you know. Please try this strategy and tell me in the comment section how it goes. Okay, I love you so much. Toodles, have a great day. Bye.